Hey there, welcome back to another video. So Bitcoin is down 32% from its all-time high. And if you're watching crypto YouTube right now, you're probably seeing two types of videos. It's crashing, sell everything, or it's just a dip, all-time high soon. I'm not going to tell you either of those things. Instead, I'm going to show you, the actual on-chain data and why, if Bitcoin is entering a bear market, why that might be exactly what serious Bitcoin investors might and should want, right? So before we jump into the video, I just want to say, if you haven't checked out the website yet, feel free to browse around the charts. I'm really happy with where development is going, and pretty soon I'll be adding a 10-minute refresh on all the charts for pro years, and all the charts that are free will remain free, of course. I really just want to try to help people, when I first got into Bitcoin in 2019, not make the same mistakes in this market that I made. I think everyone should have access to this data, even if you're not technically skilled enough to create it. I'm pretty happy with a couple of the indicators that I made, which were pretty good at identifying, that October 6th peak we had, particularly these two, the NUPL cohort risk and the on-chain risk composite, both of which you can find on the website, and the link is in the description below. So we're going to take a little sip of the water here. So what people misunderstand about Bitcoin is the term bear market. Bear markets aren't where you lose money per se. Well, you do, but in general, bear markets are where you can potentially make the most amount if you stick around, right? So today I'm going to show you the on-chain data that suggests we might be transitioning into a 2026 bear market year, and more importantly, I'm going to show you why that's not something to necessarily panic about. It's something to more so prepare for. So let's dive into the chart. So starting with an uncomfortable truth, there's a real possibility that 126K was the cycle top. There was a lot of indicators flashing, and we were overheated for quite some time here. Long-term holders selling, the profits being taken overall on an absolute dollar cost basis, right? And I know that's not what you want to hear. I know a lot of people are actually still waiting for Bitcoin to hit new all-time highs, 200K, 500K, whatever number gets thrown around. But let's look at what the data is actually showing us instead of what we want it to show us, right? So first of all, we did close last week below the MVRV mean, and this is at 102K, and it basically represents the aggregate cost basis of the entire Bitcoin network, the line in gray here. And you can see in the previous two consolidation events, we did hold support at this level, but recently in this pullback, we have fallen below it and closed a week below it. In previous cycles, when we start to break below this level late in the post-halving year, it's been a pretty reliable signal, not always immediately, but it typically precedes extended consolidation or the beginning of bear markets. And if we look at the timing, we're in Q4, the post-halving year, historically 2018, 2022. And if the pattern holds, 2026, we have all been mid-cycle bear market years, midterm election year bear markets. So Bitcoin could potentially reclaim this level and push new all-time highs. Absolutely. Is it likely at this point? The probability, is starting to shift, right? So here's where it starts to get interesting here. So I want to discuss a chart called the short-term holders in profit. So right now on a daily closing basis, around 93, I think, percent of all short-term holders are in loss. So only 7% in profit shows here. That's the people who bought Bitcoin in the last 155 days that are underwater. So nearly 93% of these short-term holders are sitting on losses. So during the April and August consolidation corrections this year, we saw around similar amounts, around 99 to 100% of short-term holders in loss, and those were in loss for quite some time until we actually saw a follow through, breaking back above the short-term holder cost basis, and then seeing all-time highs, right? So this is extreme capitulation that we saw during these two prior consolidation events, and it is similar to what we're seeing right now. These are the people who bought at 100K, 110K, 120K, and watching their positions bleed. This is the kind of pain that makes people sell at a loss, and you can see it on chain as well. If you look at the short-term holder SOPR, I didn't have this ready, but let me just pull it up. So the short-term holders so far, we saw, in the August and March and April consolidation events, we did see a majority of losses being locked in on chain during these consolidation events, and we have been seeing that, now that the price is starting to go down, we're starting to see more and more short-term holders sell for a loss. And so if you apply a smoothing on this, you can also see during the 2021 summer, we saw a similar pattern play out where, we saw the most amount of profits being taken near cycle tops in the first peak and in the secondary peak. And during pullbacks, you see the most amount of losses being realized on chain. And you can also see during bear markets, we rarely get, profit territories. We mostly see these red regions wherein most short-term holders aren't realizing more profits than they are losses, right? So we have shifted since around 110K to the negative, seeing more negative momentum, more losses being locked in on chain by these shorter term holders. And so another metric I like to look at is the short-term holder to long-term holder realized price ratio here. So this compares the average price that short-term holders paid for their Bitcoin versus what, long-term holders paid. So that ratio between those two cohorts is in purple here. So that's right now the short-term holders paid around $109,000 on average for their Bitcoin, whereas long-term holders, they paid around 37.8K, 38K for their Bitcoin on average. So short-term holders have paid around 3x more than long-term holders. And so if you look at the red and green bars at the bottom here, that means the ratio is trending down. So when this ratio spikes up, like it did in 2021 to around 7 to 8 to 9x, that means short-term holders are getting extremely overheated, paying way more than long-term holders. That typically precedes market corrections or cycle tops, right? So when it compresses on the opposite spectrum, when it compresses or trends downward, it means one of two things: either short-term holders are capitulating and taking profits, which essentially lowers their average cost basis, or we're in an accumulation phase. So given that around 93% of short-term holders are in loss right now, we know it's the first one, right? So they are capitulating, they're selling at a loss, and that's sort of starting to compress this ratio. So it flipped red at around 110K, similar to the other metric, which is interesting. So it flipped red at 110K. We saw the ratio start to trend down. And so historically, when that ratio compresses back to around the 1 to 2x range, that's historically when Bitcoin has been the best time to accumulate. So we're not quite there yet. We're still at around 3x, but we're trending, in that direction right now, at least. You can see in previous cycles when we got around to below 1 on the ratio, that was when we saw the most, capitulation by the short-term holders. We also were below the long-term holder cost basis, which is pretty rare to see. In 2022, we saw the same thing play out during the $15,000 price point for Bitcoin. In 2015, we saw the exact same thing play out when the ratio got around to below 1. Same thing in 2012. So if this ratio starts to continue to trend down, that's historically been a good time to accumulate Bitcoin, right? So this is another signal that suggests, if we are entering a bear market, we're in the early stages of one. And as painful as that is for short-term holders, for any holder, it's exactly where, that's the environment where long-term wealth starts to get built, right? If you bought Bitcoin at 15,000 to 20,000 and sold at 110,000 when this ratio started to trend down, that's a pretty good 7 to 6x gain in under 3 years, right? So short-term holders are selling at losses right now. I thought it would be a good time to also update on long-term holders. So anyone who holds Bitcoin above 155 days, they've actually started to take some losses too. We saw it around 91K. This ratio went into the negative territory. So this is the long-term holder realized profit to loss ratio. This is typically indicative of when long-term holders are taking profits on Bitcoin, it looks at the ratio of the relative ratio of the long-term holders' losses versus their profits. So if they're taking more profits than losses, this ratio is going to start to shoot up. And if they're taking more losses as compared to profits, this ratio is going to start to decrease or go into the negative territory. So this is pretty rare to see them go into the negative territory. It doesn't happen often, but when it does, it typically is either associated with deep consolidations or, you know, the early stages of bear markets. So it can stay extendedly negative for quite a period of time, but that's typically the best time to accumulate Bitcoin. And so we have started to see long-term holders capitulate here. So all in all, we've seen short-term holders in extreme pain, and even long-term holders are starting to sort of feel that pain too. That's not a necessarily bullish setup for immediate price action, but we're going to come back to why this might be exactly what you want to see. So let's go back to this chart over here and talk about valuation. So this is where things get a bit more interesting in my opinion. So Bitcoin is currently trading, you know, at two critical levels. First, the MVRV mean at 102K. This is Bitcoin's, you know, fair value baseline, the average price for everyone paid for their coins. We're sitting right about 16% below that level right now. And secondarily, the true market mean is sitting at $82,000 right now, 81,740. So historically, when Bitcoin trades below these levels, it's been some of the best long-term accumulation periods for Bitcoin's history, right? So in 2022, when we were trading below those levels, in 2018, when we're starting to trade below these levels for quite some period of time, in 2015, when we first broke below them and started trading below, and in 2011 as well, right? So they're not the most fun times, not when everyone's the most excited, right? But it has been the most profitable times for Bitcoin in hindsight, right? So another metric I like to take a look at is the NUPL, and that's the net unrealized profit and loss. So that is the amount of Bitcoin that's being held by everyone in Bitcoin. It's calculated as the market cap minus realized cap and dividing that by the market cap. So it basically shows us the total unrealized profit and loss in the system. And so this metric is starting to go down here. We are interestingly sitting at a similar level to what we saw in the summer of 2021. So back then, Bitcoin ranged from around $30,000 to $40,000 for like 2 to 3 months before eventually, you know, rallying to 69K. But from a pure valuation perspective, Bitcoin is no longer overheated. We're back in a zone where the risk to reward starts to tilt towards, you know, more favorably towards longer term holders. So in essence, I think if Bitcoin were to get a bounce here, it would happen at this level, or, you know, obviously we could just fall, break back below towards the anxiety / depression phase and perhaps see more capitulation like we've seen in prior market cycle bottoms, or, you know, chop around this range and potentially retest the MVRV mean at 102K. Hopefully, if we're continuing a bull market, which is looking less probable, we would break above this level and trend towards the short-term holder cost basis at 109K. If we are entering a bear market, I think it's more reasonable to assume that if you do get a bounce back up to 100K, then seeing a rejection there would essentially confirm the bear market case, in my opinion. And so the level I'm watching for, whether or not this is a more deep correction or the start of a longer bear market, is $82,000, where the true market mean currently is. If we hold here, we might just consolidate for a while and sort of build a base like we did in 2021 here. You can see Bitcoin held the true market mean at $30,000, $29,000, and then sort of bounced back and retested these other levels, the MVRV mean, the short-term holder cost basis, and then bounced back below it and held it as support on the way up to an all-time high. I'm not saying that has to happen. I'm not saying that's the most probable outcome. I'm just saying it's a possible outcome. It's a possibility, right? We have seen that play out in the past. And so I wouldn't necessarily destroy that sort of outlook for Bitcoin just yet. If we do get a bounce from these levels and retest the MVRV mean, then that might be an area of interest to look at. And so the previous consolidation zone from this last year here is also a pretty interesting level because it's right below the true market mean. If we drop below here, it's a 40% plus correction, and I'd be taking the bear market case much more seriously in that scenario. And so the next area of interest that I would be looking at is the realized price. That's around $56,000 right now. And that's the average cost basis across all Bitcoin. This is marked, deep bear market lows historically. If we hit this, we're definitely in full bear mode, but that has historically been a really good time to accumulate. If you look below this yellow line, that's the realized price for Bitcoin. So and that has marked relatively good times to accumulate Bitcoin, right? So if we do get a bounce back up to 1 or 2K, that's, I think, a more interesting area to watch for, right? So I think most people have bear markets completely backwards. Most people treat bear markets like they're bad, like there's something to fear. But let me ask you something. When did you accumulate the most amount of Bitcoin? I know when I did, it was around these lows here. And so was it at 60K? Was it at 80K? Or was it at 20K during the bear markets? Was it at 30K during the bear markets? The reality is, bear markets are where wealth is made and bull markets are where wealth is realized. So in 2015, when Bitcoin was at $200, people who bought were up 600x at the peak for that cycle. In 2018, when Bitcoin was at $3,000 and people who bought were up 20x at the peak in 2021. And in 2022, Bitcoin was at $15,000 and people who bought were up 7x, 8x, right? So the pattern is pretty clear. The best time to accumulate Bitcoin is when no one wants it, when the headlines are negative, when people are scared. But that's the hard part. If you have the confidence to invest in the asset when it's at its all-time highs, should you not also want it when it's at its low, right? So if we are transitioning into a 2026 bear market, I personally think the probability of that is increasing, although it's not a reason to panic. That's a reason to, prepare, right? If we follow historical patterns like we have in past cycles, we might see a 12 to 13 month decline from the top. So that would give us around from October 6th to around October 6th of the following year, right? So that's a 12-month gap. Could be plus or minus a couple of months, right? It doesn't necessarily have to be that exact number. We've seen Bitcoin deviate from some patterns that has historically shown. So, for example, we saw people were always saying how Bitcoin could never break below its previous all-time high, but we saw that play out in the prior cycle where the all-time high in 2017 was $20,000, but we broke below that in the bear market year. We never really saw that until this cycle. We didn't break below it, the all-time high from 2013 and 2017, but we did break below the 2017 all-time high in 2022. So just because people say, it can't happen, doesn't necessarily mean it's true. It can happen. And I think if we do deviate from the cycle, I think we would deviate it from the sense of the historical drawdowns, right? So in 2022, when we saw the drawdown of 77%, in 2018, when we saw the drawdown of 84%, we can note that is a diminishing, decrease in volatility. And so we could also see a decrease in the amount of time it takes to actually form that low. And so if we do see that 2026 bear market play out, it doesn't necessarily have to be 12 months exactly. I think it could deviate some in terms of the actual downside, in terms of the percentage downside, and also in terms of the time taken, right? I think those two can both be reasonable outcomes. And so I'm not necessarily looking at it from a time-based perspective, although that is important. I am looking at more so if we do start to hit into these resistance levels, into these support levels, then that would be a more immediate time to accumulate, not necessarily the time taken. And so historically, these have been pretty good accumulation zones. And I'll be honest with you, I've been saying all this stuff since I started the channel, that 2026 would likely be a bear market year. The mid-cycle pattern is pretty much too consistent to ignore, right? So you can see that historically, the decreasing volatility to the downside is much more consistent than the upside move. So for example, in 2018 to 2017, or 2018 to 2021, we had nearly a 20x move, as compared to this cycle. We only saw a 7x move from the bottom to peak. And so the actual lows are much more consistent than the actual peaks. And so if we do see a drop, I would say it would have to correspond with around a 60 to 50% drawdown. And that's just what we've seen. I don't necessarily think that's a bad thing. I think Bitcoin does have its volatility inherently, but it also allows people to invest at lower prices, which is always a good thing, right? So to wrap this up, the data is suggesting that we might be transitioning into a bear market year for Bitcoin. Short-term holders are in extreme pain. Long-term holders are also starting to take losses, and we're starting to break below these key on-chain levels that we've seen historically in the past. When we break below them in the post-halving year, that's not a good sign. Could Bitcoin rally and make new highs? Yes. Is it the most likely scenario at this point? Probably not. But I know not all of us would necessarily hate that from happening. I think it could be a possibility, but it's not necessarily the most probable outcome at this point. So if we are entering a bear market, that's not bad. That's not something to fear. Bear markets are where generational wealth is created in Bitcoin. Whether we bottom here at 83K, or if we go to 70K, or if we go to 50K, the long-term thesis remains the same, right? So all the charts I showed you here today are 100% free at ChartInspect.com. Link is in the description below. I built this platform specifically to make these institutional grade on-chain analytics accessible to everyone. So if you found this perspective helpful, hit the like button, subscribe, and drop a comment. Are you accumulating here? Are you waiting for lower prices, or are you taking profits? I always want to hear what you guys have to say in the comments. I pretty much read all of them. So thanks for watching, and I'll see you in the next one. Bye.